You're listening to Biotech Hangout, a live and unedited weekly discussion of all the latest news in our industry with a group of biotech insiders, although I often think of myself more as an outsider. I'm not sure about you guys. I'm Josh Schimmer. My co-hosts today, Paul Matteis, Brian Skorney, and Graig Suvannavejh. Greg, did I get your last name right?
Yeah, Suvannavejh. Thanks.
Perfect. Okay. For more information about our hosts and guest speakers, or to listen to the most recent episode, please go to biotechhangout.com. Also, disclosures for companies we cover can be found on the Biotech Hangout homepage. Any commentary we provide should not be construed as investment advice, as we all know how volatile and risky biotech investing can be. So, with that, it is great to be back on Biotech Hangout. Been out and about for the last few weeks. I haven't been able to participate, and boy, there's been a lot going on. I thought we'd start off as we're kind of getting to the end of this year with an outlook for 2026. Biotech obviously started this year with a lot of pain that turned around mid-year into one of the strongest bull rallies I think on record for the industry. Would love to hear how everyone's thinking about 2026. Are we going to sustain this momentum? If not, why not? Paul, why don't we put you on the spot first?
Yeah, sure, man. I feel pretty good. It's interesting, Josh. Like I read something, sometimes this probably happens to me. I read something that someone posted on Twitter that was said by the Cantor Biotech team, which I thought was actually like a really good point, which was that, the success of a lot of drug launches in the past year from small to mid-sized companies, as I think like sort of marks a different phase of where we are with biotech today versus 10 years ago. Whereas like a lot of the exciting stuff that's going on right now is not propped up on a dream, but certain drugs that look great in phase 2 and phase 3 are kind of becoming realities. And we're seeing young companies like, Insmed, Madrigal, like many just kind of be able to grow up. And so I feel like that piece is really, really healthy. I feel like the drug pricing piece from a threat perspective continues to seem, relatively minimal. I think there's going to be more M&A. So it feels like if we just kind of list off the factors that sort of drive strong biotech performance in the backdrop of an XBI that still is kind of nowhere near its sort of all-time highs when things were frothy. I mean, I feel relatively good. I mean, we'll talk about it more. I'm like, it's hard not to be somewhat nervous about this FDA stuff. As it relates to timelines and efficiency and also just, predictability. But I think in general, like for drugs where the data are fairly unequivocal and the endpoints are validated, I still feel like the FDA is going to be mostly fine. I mean, I'm the most worried about it in this kind of rare disease realm. And I don't cover vaccines, but of course that's its own animal. So, I mean, I think like in general, like it's hard to make a call that the sector is going to be up 30%, 50%, but like, I guess I'm not worried about us entering into another bear market imminently. Curious what others think.
Yeah.
Maybe I'll add just I'm a huge baseball fan. Uh, and with that in mind, like I try to think about analogies relative to baseball. And so I'm frequently asked, like, given the rally in biotech, like, where are we? And I'm curious what others might say. But I think it feels to me that we're like in the third inning of what this rally is looking like. Now, I will say that I'm a bit concerned about how quickly the XBI, and again, we know that's an imperfect proxy for biotech, but I am a little concerned that it's gone up so far and so quickly. I wish it'd be a little bit more gradual, but every market is a new market. We always look to the past, obviously, but you just never know. But I do agree with you, Paul. I feel pretty good. And look, we've got JP Morgan coming up in San Francisco next month. I think the sentiment there is going to be incredibly positive and bullish. And obviously, the markets are dynamic. FDA is the FDA. But I think the outlook for 2026 is very good.
Awesome. Brian, how about you?
Yeah, I would say I'm generally in the same camp. I think. Look, I mean, maybe to try to counter Greg's argument about just how fast it's come. I mean, you could also say likewise, like how fast it went down. I mean, it took a while, but right, like the COVID peak. I mean, we just saw a pretty tremendous drop from peak XBI. Frankly, while a bunch of other things were working really, really, really well, right? So I mean, we've all struggled sort of through this 4 years of just horrific divergence between the XBI and the S&P, right? So, I would argue it's been an aggressive move since this summer, but depends on what chart you're looking at. Like if you're looking at a 6-month chart, yeah, XBI looks like it's in just bubble territory. But if you look at the 5-year, it doesn't look that way at all, and it still looks relatively cheap on a performance basis. Now charts are charts, right? So they don't necessarily have views into the fundamentals. But I guess I would argue again, like whether you're using large caps, whether you're using kind of historical acquisition premiums, historical acquisition prices, like we're not really in bubble territory, right? I think like the large cap pharma sector is trading, at still an average of like 15 times. I mean, you have all sorts of sectors that are trading at a significant premium to that. And look, I think it's, I thought there was a really nice tweet that summarized it by Rod Wong earlier this week saying, unfortunately, FDA is now the major remaining source of policy uncertainty. Tackling reshoring, MFN, tariffs took a lot of creativity, and I'd consider hard because there was no blueprint. So the FDA is kind of, as Paul said, a lot of the concerns have really kind of dissipated here, and the FDA is sort of the one remaining one. And I'll make an argument later as we go through it that maybe even that we're kind of creating more noise around than what it actually could have fundamentally meaningful. The one thing that I would say I would just keep note of, because it's had such a big impact when it starts changing, is just interest rates, right? I mean, I think we're still in this dynamic of fighting whether or is inflation in total control, and the economy is slowing down. And interest rates should continue coming down, or are we going to see a point where people worry about interest rates? Because the XBI is very, very much tied to federal interest rates just because of the long investment cycle. So I'll stop with that.
Yeah, it feels like a very different industry than we've seen in the past. I think the biggest divider between the old biotech and the new biotech is the idea that you can actually be long product launches. There's almost no bigger red flag of an industry when stocks can't perform when they go from that hope and dream phase into the execution launch phase. And so, not perhaps surprising that the sector struggled for a while up until it kind of figured out the algorithm for successful product launches. Of course, one component to that is premium prices, which may be a topic we come back to at another point, either today or another week. So with that, a maturing industry, increasingly cash flow positive type industry with strong momentum and fundamentals, I get asked a lot whether, as we enter 26 and anticipate a wave of IPOs, whether that wave of IPOs might impair the biotech rally by adding, perhaps more speculative names and diluting the quality of the industry, as perhaps we've seen in some of those prior very speculative years. Would love to hear everyone's thoughts about the setup for IPOs in 26, how you're feeling about private companies, their prospects, and do they put the broader sector at risk by being overly speculative?
Maybe I can chime in to start, Josh, because I know from your email, right, you have a view that there's a backlog of high quality companies out there. And from my seat, right, like I've launched on 3 IPOs this year, I think, Sionna, MapLight, and LB Pharma. And so not to say that these 3 are emblematic for all IPOs in the future or private companies broadly, but all of them are mid-stage to like late-stage companies, right? And I remember back to 2020 when companies were putting in an S1 that one of their IPO catalysts was, getting an IND accepted, right? So I still feel like when I look at the private companies that, we are vetting and could be companies that go public in the next couple of years, it still feels like we're a really long way away from that, and that companies that are thinking of going public are not taking it lightly at all. It's not kind of like a YOLO, let's go public because we can kind of thing. It's like, are we ready to be a public company? Are we ready to have events that can be value creating in the public markets does it make sense for us to be public? Because if we're public and our data is good, we can raise more money because public investors will value this type of data. So, I mean, like, you never say never, right? I mean, things can get out of hand if you have a handful of IPOs that go well, and then people start looking at IPOs less as kind of an emerging company investment and more of just like the IPO product, right? The concept of an IPO that pops. But I don't think we're there at all. And I still feel like because of how tough the IPO market has been, we've been in a world where there's been like a lot of compelling private companies that have been able to mature and raise a lot of private capital. You know, I also, not to just kind of go off, I want to hear what you have to say too, but yeah, I mean, the private investing world has changed a lot over the past 10 years as well, right? There's a lot of public investors now with deep pockets that do privates, which I think has allowed private companies to sort of better incubate themselves and, you know, be more than just one drug stories. So at least if I think about the first 6 to 9 months of next year, and I think about just the companies high level that I think could go public, like, it feels like they're companies that are going to be institutionally relevant, not just sort of like illiquid, publicly traded venture investments, if that makes sense. Like, do you agree, Schimmer?
Well, how many IPOs do you think we see next year, Paul? What's your guess? I'm generally aligned with you.
That's a good question. 15.
15.
What do you think?
Really?
Over under?
Oh, I think the over under is closer to 50. Greg, what are
50?
your thoughts?
50?
There are so many high quality private companies with really de-risked products and platforms, right? I mean, we've been accumulating them with a closed IPO
Maybe I'm
window
insane.
for
Yeah.
3 years, right? Like
50.
I've never seen a crop of such mature, de-risk companies that really deserve to be public when they're ready. And so, as long as the bull market continues into next year, you know, we hit a peak with over 100 biotech IPOs a few years back. 50 is just half of that.
I would say I would definitely take the over, Paul,
I
on the
guess my
15.
number was stupid, but yeah, keep going.
Um,
Like, I feel
I
dumb. Yeah.
don't. No, but I don't have, as good visibility into the IPO pipeline. I talk to a lot of private companies. I think they're very hopeful. I would agree generally with a sentiment that we are seeing, at least at this stage, more mature, more de-risked companies that are, being teed up, and I think deservedly so. Is that over under 50? Maybe I'll be on the under of that 50 number, but I'm certainly hopeful that we get to 40s and 50 and maybe even 60 if Josh is right. What I do think that is different this time, and look, that IPO period that we had from, let's say, 20 to 22 was incredible, right? We've all been around the business for a while. I mean, that was just remarkable, and it got silly, quite honestly, in retrospect, right? I remember being at a prior shop. I think one day, like 4 of my names launched on the same day in terms of the IPO, and I was there doing investor education and didn't know who wanted to talk about what, and I had to remember, like, oh yeah, this company, right? So that was like at the heyday. I don't foresee that 2026 will be like that, where we were in that just so many in any given week. But if we have a strong 2026, that could set a condition up for maybe a very, healthy 2027. And I think what we want is we just want sustained performance, right? And I think that the crash that we saw from the XBI going, what was the peak, like 174? And look, we're only like 30% away from like that peak, but that was just such a massive crash that I think this time around, like I think companies, I think VCs, and I hope on some level bankers, hope the whole system will be a little bit more disciplined about how we go about things.
Right,
Totally disagree. I think the system will absolutely start pushing out preclinical stuff eventually. Probably not next year, 2027. But like it's happened it's just the cycle, right? I'm going to go with 23 IPOs next year. Josh, I'd love you to send me the list of 50 private quality companies that you think are going to come out. Paul, I totally agree with Paul's sentiment. I think what we're seeing in the IPO that are getting out right now, and I hope it stays this way, is you see development stage programs making it to the public markets. I do not believe that at any point the public market has been able to sustainably analyze preclinical companies every 5-10 years when the cycle goes to peak. The public market tries to do that. I think it's total FOMO, and it's opportunistic financing, and it winds up being the signal of the crash. So I feel like we're in a safe place on the IPO side of things, because I truly do think what is coming to market are mostly development stage assets, which the public market is constantly capable of evaluating and coming up with some reasonable valuation on it, even though we all will dispute those specific valuations.
Yeah, I guess the question is whether we lose discipline or not. I think so far things have been very disciplined across, and that's been actually a real tailwind for the industry. It's disciplined spending, importantly, disciplined capital allocation, perhaps forced upon the industry after years of being somewhat capital starved. And companies are vaulting to profitability at paces we've never seen before. And once they're profitable, I mean, companies used to do everything they could to avoid being profitable up until like a few years ago, which is kind of bizarre and baffling. Now that companies are actually hitting profitability, sustaining that momentum, starting to see the returns of that in the industry more broadly. All right, let's go to, probably everyone's favorite and least favorite topic to talk about, Washington, DC policy, FDA, HHS. It's like Groundhog Day meets Twilight Zone. Brian, why don't you kick things off with some of the latest in terms of the leadership changes going on?
So look, I have said since the beginning of the year just to expect chaos at the FDA through HHS. I think direction is hard to pick here. I would argue that there are just totally different conflicting views coming out of HHS and the agency, and it makes it very hard to predict a lot of things, right? I mean, the one thing that I would say is pretty easy to predict is that this HHS is going to be pushing back against vaccines. That has clearly been the case. I mean, we're seeing a negative vote from ACIP on at-birth Hep B vaccination right now. That's receiving criticism. But beyond that, like, is this a flexible FDA? Is this like an FDA that's going to be extremely rigorous? It's really, really hard to tell because they sort of talk out of both sides of their mouths. And what we've really seen is a pretty substantial breakdown in terms of the institutional memory here. There is very little left of the old guard, at least on the senior leadership side, from the FDA. And I'm not just talking about, obviously, the FDA commissioners. That's an elected position, appointed position. So more of a political position, but people who were 20, 30-year employees of the FDA who rose into leadership roles. Almost every single one of them is almost gone at this point. And the most notable one just happened this week, and that is Richard Pazdur, who has been with the FDA way longer than I've been in this career. And, we've all sort of followed him. He's been one of the most prolific voices in the FDA, running the Division of Oncology, taking over the Oncology Center of Excellence a number of years ago. And, we were very happy, and I think all of us were really happy to see after George Tidmarsh controversially left the CDER position after just a very brief stint. Pazdur wound up taking over the CDER position. But, I mean, basically 3 weeks later, he is out. And, I think there's numerous reports as to what's sort of driving that decision. Could be his counterpart in CBER, who's also the CSO CMO, Vinay Prasad, issuing some internal emails that have been very controversial. If you believe media reports, he was sort of not being given leeway in terms of who to hire within CDER, and maybe he felt that whatever he was promised going into taking the job, was not coming to fruition. So, his news of his resignation has hit in the last week, and I think we all sort of felt like he was kind of the last adult in the room at the FDA. Tracy Beth Høeg has taken over as at least the interim CDER director. She was sort of Marty Makari's chief advisor before that. And she's also had a somewhat controversial role in the FDA, going back to Dr. Prasad's email, and some of the criticisms of the COVID vaccine, and sort of these 10 childhood deaths due to the COVID vaccine that they're talking about. I mean, she was the person sort of credited with the analysis to come up with that. So, you know, it is definitely installing someone who is more along the lines of kind of this new Maha RFK mentality than sort of the old guard of Pazdur. And I think, you know, pretty much across the board, people are concerned about the potential impact from Pazdur leaving and the state of the FDA right now. But, you know, I'd love to kind of start with that and chat through what everyone kind of thinks the impact is going to be.
Paul or Greg, any thoughts on that specifically?
I mean, I feel like the public health, you know, that piece of it is like to me, it's like the more depressing part, right? I just don't understand why these guys are also obsessed with COVID vaccines. I mean, gosh, Operation Warp Speed was one of, you know, not to delve into politics, but it was just probably one of the biggest achievements of like the Trump administration. And, you know, there's a lot of hindsight stuff with COVID that people can argue about, but I just don't get it. But you know, other outside of that, like I said earlier, when we were talking about the sector outlook for next year, it still feels like if you're an investor and you're looking at good science, you're looking at trials with well understood endpoints, there's regulatory precedent for what's happening, you know, like the unmet need is significant. Like I think 80 to 90% of the time, like you're probably fine, right? I mean, we're going to talk about, you know, UniQure, which feeds into kind of other stuff in gene therapy where companies are running single arm trials. And that's the hardest thing to predict, right? I mean, I just don't know how you reconcile some of this commentary about speeding up drug approvals and a plausible mechanism pathway, and then conversely, all the other kind of news that's been sort of confusing with companies that thought they had alignment and then didn't. And so, I mean, but again, I think from an investor perspective, I mean, I think you can, I don't want to be so cynical and kind of boil it down to stocks, but that's our job. Like, I do think you can probably invest around this theme and generally be okay. You know, no one who's listening to this cares about what I think about public health. I'm not a public health expert, and you know, we all have our own personal views. But yeah, I mean, that piece of it is someone who's followed the industry for a long time and is kind of like venerated that the FDA, you know, has sort of like, I've never seen an FDA leader mention a president's name like in a memo. Like I just don't, like, you know what I mean? Like you see that and it's like kind of a bummer, right? Like Pazdur was under a number of different Republicans and Democrats, and that has never mattered. And to see that matter, I think is kind of a bummer. But I think from an investment perspective, like I still think it's like probably going to be fine for the most part outside of certain cases that are more complicated.
Yeah, let's placehold the rare disease stuff in the UniQure. We'll come back to that in a second. Just kind of close out the vaccine discussion. Greg, on this one, anything to add?
Yeah, I mean, I think big picture, again, I'm not going to comment too much on like public health. I do think, though, it's important to remember that the FDA's job is to protect the, you know, the safety of American, you know, people in terms of whether it's new technologies, new drugs, new medical devices. And yes, there is a view around, you know, maybe we should take a closer look at some of the things that either in development or have gotten approved. But I do think bigger picture, whatever is happening with the FDA, I think it can only be negative for the American public. And I do see the potential of long-term consequences. Again, I won't comment much more. I think as it relates to stocks, right, and this is closer to what we do, um, I think it still is biotech is still obviously a very investable sector from a long perspective. I do think that, you know, you can continue to find very strong and capable companies that are developing hopefully transformative medicines for patients. And with that said, I do think that we will continue to see positivity. But again, this yo-yoing of what's happening with FDA policy, I think is a bit ridiculous. And hopefully, you know, if we have this conversation 3 months from now or a year from now, like we'll feel still good about what's happening at FDA, but it's just really hard to make sense of what's happening. And you know, a potential topic that I think we've tossed around is that this idea about potentially lowering the number of trials required for approval. And I think that can be a net positive. for the industry, and it can be a net positive for the American public. But I do have some issues with that as well. But let me stop there and see if we want to tackle that topic.
Well, I'll tell you, like what Paul's point about why COVID vaccines, like why has this become the um, the flashpoint for all this drama? And as I'm thinking about it, it's a few things, right? Vaccines are one of the very few products that will literally touch every human being in the country, number one. And it's touching them at a time that they're generally healthy, number two. And number three, they're not water. I mean, we saw with the COVID vaccine, there are potential risks such as myocarditis that have to be considered. And then on top of that, um, we know science is imperfect, right? Anyone who's been in the industry for a blink of an eye knows the limitations of science. We don't have answers to all the questions that people may want. And now on top of that, in this realm of social media where anyone can have a voice and a pulpit to highlight the deficiencies, the questions around vaccine, and to kind of rally some anti-vax sentiment is probably this confluence of forces that are coming together at this point in time and putting vaccines, unfortunately, in a very difficult position. Now, one thing that's actually evolving coincidentally are passive immunity approaches, companies like CDER, companies like Invivyd that are potentially going to offer, instead of vaccine protective immunity, monoclonal antibody protective immunity that may be able to accomplish everything that vaccines can accomplish and more, but not have some of the baggage that's accumulated with the space. So, very interesting times. I'm sure we could spend a lot more time on this discussion point, but why don't we go on beyond vaccines about how the FDA may be impacting the industry more broadly? Let's come to UniQure. I think it sounds like we've kind of agreed that, it's going to be more on the margins of some products that are not as obvious in terms of offering clinical benefits that outweigh the risk, and hopefully the minority of products going through the FDA, and as such, not impacting the broader sector. But let's come back to UniQure, I should say, Paul, and give us kind of the lowdown of what's been happening there.
Yeah, thanks, Josh. So, I mean, they basically updated this week that their meeting minutes are consistent with their meeting they had with the FDA on November 3rd, where it was said that their phase 1/2 study, is not well suited to support the basis of a BLA filing for AMT-130, their gene therapy for Huntington's disease. I've been saying this when on this forum and others, right? Like whatever you think of their data, whatever you think of this whole idea of comparing to natural history, these guys in May got breakthrough and had a meeting around a statistical analysis plan that was agreed upon for their year 3 data, which came out in September. And so for the FDA in November to kind of suddenly say, okay, you can't file on this, I guess you're supposed to sort of believe that this May meeting was like a sham, right? Like it's just, and so, I think everyone's trying to kind of make sense of this, right? And I think there's a few questions that are cure specific and a few broader questions just kind of for investing going forward here. I mean, the cure specific question, right, is this going to somehow be reversed, or will there be a compromise? The compromise could be maybe they follow these patients for longer. There's some patients that hadn't reached 3 years. Maybe they can have those patients, right? Is there even going to be a path on this study to file? And I think who knows, right? We don't know, right? I think separately, I think the question is just like, what does this mean for other rare disease companies, right? Because Josh, you cover some of these stocks too. And I think Brian, you and I both cover Lexeo. Like there's a number of these gene therapy companies that are running single arm pivotal studies. These companies have a number of them have consistently met with the FDA, have breakthrough, have had dialogues in this Prasad CBER, right? And so the question is, should this cure situation lead us to wonder the realness of those regulatory alignments? And I think at least I think with the cure situation, it seems like in the spring when they had their meeting, right, Nicole Verdun was at the FDA. And it seems plausible that she or others that were more senior at CBER that are no longer there may have been champions of this, and now they're not there. Whereas, if you're meeting with the FDA right now and aligning on a single arm pivotal, hopefully you're meeting with the folks at CBER who are the decision makers. I also would say too with UniQure, right? It's been said before, but the original goal of this study was not to be approvable, right? It was originally a placebo-controlled trial, so this was a pivot to a natural history control. And so, I think from my perspective, every case is nuanced, and I think the other sort of complicating factor with some of these rare disease companies that are doing single-arm pivotals is, you can have alignment with the FDA, but that still doesn't tell you exactly what the bar is for approval. Like, how good does your efficacy have to be? But I guess I'm feeling for rare disease, still cautiously optimistic that if you're pre-specifying everything and you have an agreement that I think we should believe it, right? I do. But this UniQure situation, I'm really close to it, right? I covered this company for a long time. I'm a believer in their therapy. It threw me for a loop. I felt like their regulatory alignment was pretty strong. They had a number of meetings, breakthrough and everything. But, I do think maybe what happened is, they were having these meetings with the FDA in the spring, which was kind of a very transitory time, right? Where we know just weeks or months later, right? There were significant changes. And so, again, I think the broader implications are hard to say. Curious what others think.
I think, one of the things that I think is notable on the cure side, and I would argue pretty much everyone that I've talked to going through CBER, no one's explicitly stated that they have had a meeting where Vinay Prasad spoke or was present at.
I've heard the same thing. I haven't talked to anybody who's had that meeting, Brian.
So I think that's a little scary because, I know he goes online and he says, "Oh, I'm not micromanaging things," but all the signals are that he is inserting himself into decisions all over the place, right? Tidmarsh made that assertion. Some of the initial press off of the Pazdur resignation make that assertion. He certainly wrote this email that has been spread out over the weekend. So he's really taking a very active role, which I'm not surprised at all. I think that is Vinay's nature. But I think that's a problem because if you have a reviewer who was there under Nicole Verdun and Peter Marks, and they're sort of used to this way of management, I don't know that they're rocking the boat. And some of these things are probably places where they would have gotten approved. Certainly, probably would have gotten approved under Peter Marks' CBER. So I think that's interesting. If I had a drug that was going to be up for a CBER-based approval, almost any approval at the FDA right now, but certainly through CBER, I would do my hardest to try to talk to Vinay Prasad and get a very, very clear indication from. I would want him to write any minutes or sign any minutes that come out.
It doesn't feel like that's doable, though.
Sure.
Again, with UniQure, and look, it's one company, right? The FDA has so much to oversee, but they made this announcement on November 3rd, and they're hoping to have another meeting sometime in the first quarter. You wish they could have a conversation sooner. They have breakthrough. What's breakthrough for? I thought you were supposed to have a bat phone to call the FDA, right? So, yeah, it's tricky.
What's interesting here is that the facts are the facts. We're just seeing different interpretations of those facts, different applications and decisions around regulatory prospects. Obviously, very different than Peter Marks. I think many of us, appreciated Peter Marks's very patient-friendly approach to approvals, and he even acknowledged that under his framework, the FDA was going to approve drugs that didn't work. They'd have to figure out, how to withdraw them from the market, but they wanted to err on the side of caution. And I think I think for many of us, that might have been a little bit too lenient in terms of the caliber of products approved. I think I don't think it's controversial to say that if the UniQure data set were far more definitive in nature in terms of offering benefit to Huntington's patients, this wouldn't even be a discussion point at all. It would be approved. And so, we're looking at a data set that is prone to perhaps more interpretation than other data sets that we often see, and perhaps not necessarily surprising that this product is getting a little whipped around as we've seen leadership changes at the FDA and perhaps a little bit of a philosophical difference. But again, this certainly seems to be more isolated an event because of the, let's call it the immaturity of the data in the sense that it's not definitive,
Hey,
right?
Josh,
There's
can I,
hope.
can
Yeah,
I ask you a
please.
question? Like, do you cover, like, what do you cover? And Brian, too, because I know you cover Lexia. Like, how are you guys thinking about the next crop of gene therapy companies, like in the Rett syndrome space or in some of these genetic cardiomyopathies where, they have alignment on running a 15 to 20 patient open label pivotal trial? Like, do you guys, like Brian, like, do you take all that at face value? Josh, like, what do you guys think? Because, like, I mean, look, this FDA put out guidelines in September that read with significant Peter Marks vibes, right? So it's like, are we not supposed to believe that? Like, I think it's just interesting.
Well, it's, yeah, go ahead, Brent.
Yeah, I was just going to say, look, I look at these names and I think, and I've said this again and again because Vinay says this again and again, and I think this is where you get to the heart of like going to just one single study or single arm studies, right? Like in a case of a parachute, you don't need a 500 patient placebo controlled study, right? So look, for something like Lexio, I think you're dealing with endpoints that are obviously not going to be occurring on placebo, right? And I would say that across the board for all indications, like that's what I want to see. Like I want to see something that's really needle moving on an endpoint that is, either reasonably likely to predict clinical benefit or is clinical benefit in and of itself. And there's no doubt at it, right? Like I think where we get into these problems is when you have like these slowly progressive changing diseases with functional endpoints that are highly variable over time. And you say, oh, if we do a natural history where we're going to select the patients based on like some database and compare our open label experience where we're bringing patients into a clinical trial and giving them all the care associated with the clinical trial and then comparing it to sort of like this natural history study, you run into a lot of potential issues around certainly some level of overstatement, right? So to me, that's where like I worry, like if you're trying to make a case where, hey, if I look at like 2-year progression of this disease and 100 patients on natural history, I see like, a 10% detriment. And, in my open label study in 30 patients, like I see, flat. Like, I don't know how to realistically interpret that. So, to me, when I'm looking for single arm studies, like if you have a 60% RECIST response rate in oncology in a, relapsed refractory patient, like that's not chance really. And so,
And
that's what I think.
and I think that's spot on, and it's consistent with what Vinay Prasad's been saying, particularly about those neurodegenerative diseases that, very hard to really prove a treatment effect without a properly constructed randomized clinical trial. But in many other settings, we are seeing signals of, the RECIST equivalent of, whatever the disease may be. In Rett syndrome, gain of function that may appear to be unprecedented for kids, or for cardiac targeting therapies, a change in left ventricular mass that, one would really not expect to see outside of an intervention. I've got kind of my own views in terms of that broad field, which is actually probably a good segue to the phase 3 Capricor data for their cardiac. I'm trying to get the product characterization right, but cardiospheres for treatment of muscular dystrophy, a very controversial mechanism, a very controversial application and path through the FDA that culminated this week in positive phase 3 data. Now, even that data has been subject to very intense scrutiny on Twitter and amongst investors around the statistical analysis. But we do seem to be seeing a fairly consistent signal here across trials, certainly on cardiac function of patients and stabilization there, as well as some signs of effect in peripheral muscles. Probably one of the most controversial names of the year, kind of winding up now in December with a positive data set. Stock's up like 400% this week. Want to flag it's a San Diego-based company, so always excited when we see San Diego-based innovation thriving. They do have a partnership for this program with Nippon Shinyaku, but they get a very meaningful, like 30 to 50% scaled tiered royalty on sales, like super high royalty. So again, like a really interesting setup here as we go into, likely an FDA review next year and applying the rigor and scrutiny of Vinay Prasad now on this data set, one where the mechanism doesn't necessarily jump off the page, but there are actually some really interesting possible explanations as to how and why this therapy is working to deliver benefit to patients. I'm not sure if everyone else has been following this name and data set, but it is a great segue kind of from the conversation about UniQure's approach, the FDA's approach to UniQure, and whether there are going to be issues for this data set. Personally, I think it's going to be very hard to reject this after a series of kind of consistent signals. Yeah, we don't understand the mechanism fully, but that shouldn't necessarily preclude providing this very important option to patients with a fairly unprecedented data set.
Gosh, I don't have anything else to add on Capricor. I do think it's interesting that you have drugs that perhaps the mechanism of action hasn't been exactly elucidated, and should that be a reason for a treatment not to be made available to the public, I'll just remind everyone we have a ton of neuro drugs that we really don't know how they work, and whether these are all more on the psychiatry side. We have lots of drugs that we don't know how they work, but yet they work and they're approved. So I hope for patients and the Capricor situation that it ends up being a
I
positive.
mean,
It's
Josh,
that's yeah, go ahead, Paul.
this is like the first therapy to hit cleanly in an RCT in this population, right? Like, how do you not approve it, understanding the other things that are approved, right?
Yeah, and to get it right, allogeneic cardiosphere-derived cells. That's what Doramia is specifically. To continue the kind of this stream of thought, which I think is really important, right? When we have a very solid understanding of the biologic pathways and the mechanism by which a therapy is working and a high degree of a priori confidence, and we're even seeing kind of the telltale signs of this from the FDA, the plausible mechanism pathway, right? Like when everything lines up, and a priori you have a very high probability of clinical success, there's probably less um, onus on that data set to be definitive, right? Because perhaps a more um, a smaller sample size, if it aligns with the underlying biology, we will give it the benefit of the doubt. Um, but when you wind up with a therapy where you just really don't necessarily believe in the mechanism or feel like you understand the mechanism, Greg, to your point, it doesn't mean that you don't approve the product, but I think it is reasonable in that setting to have a higher bar of data. And that's, I think, in some ways what the FDA wound up doing. They said, look, we don't necessarily understand how this works with that lens and that framework. We're not necessarily comfortable approving based on the data set that you provided. However, if you can replicate this in a well-controlled prospective clinical trial, then yes, we will grant approval. And it seems kind of like that may be playing out, and great for patients and great for biotech, because now we do have perhaps a much more solid foundation of data to consider this product and really have a lot more confidence in terms of how to manage it. That said, still a lot of controversy, just nitpicking around the statistical analysis plan. I thought the company did a very good job um, on their data review, kind of addressing all the questions. Kudos to my colleague Kristen Kleska, who's had a great call on this one. And at the end of the day, great for patients. All right, we got a bunch of other data updates to cover, so let's try to cover them as best we can. Why don't we go back to Cobenfy, a data set we were supposed to get, but turns out we're not going to get it. Greg, do you want to kick us off on this one, or Paul? I forget who was going to.
Yeah, no, I'll be happy to. I'll make my comments brief. Yeah, I mean, Cobenfy, I think Paul and I know the muscarinic mechanism pretty well. Cobenfy was the first of these very novel drugs to get approved, and it is approved in schizophrenia. It may have had or be having some hiccups in terms of its launch in schizophrenia. But I think there is a fair degree of interest and excitement around the potential of expanding the label. We were supposed to be getting data, phase 3 data from the ADEPT-2 study by the end of this year in a condition called Alzheimer's disease-related psychosis, or ADP. And with some irregularities that were cited by the company, and I guess identified early on, they elected to add more patients to the study. They're going to exclude data from the troubled sites, and they did push out the readout until the end of next year. So I guess we'll all have to stay tuned about what's happening there. I did want to comment on
Can I
Axsome
add
Therapeutics,
anything
but
real
Paul,
quick
did
on
you have
that?
another
Yeah,
comment?
well,
Yeah,
it's interesting.
go
Yeah,
ahead.
because like I mean, this is an interesting example that just shows you again and again that stocks are all about expectations, right? Because this announcement reads bad, and yet Bristol went up, and Maplight, a recent IPO with the muscarinic, went up over 20%, right? And I think the concern here was that this study had essentially completed at the end of July, and we still hadn't gotten the data, right? And I think investors over time were thinking, well, there's no reason to hold back announcing if the study works. So what's going on? But why? But what was interesting is that there was a group that like a DSMB or IDMC that reviewed the data of ADEPT-2 and recommended adding patients to it to fix whatever the powering deficiency might be from these site conduct issues. And Bristol engaged with the FDA around it. So, it's a little bit of like tea leaves, and I think we don't know the criteria by which the IDMC was giving Bristol advice on increasing the sample size. But one read of this situation is that a group reviewed some of the data. Bristol may remain blinded, but they reviewed the data and they're seeing some sort of signal, right? And giving them a recommendation of, hey, get the sample size to this point, right? That might restore your powering, right? I mean, we've seen this a number of times in psychiatry studies. So, I mean, my interpretation of this event was actually like the probability of success of this trial arguably goes up versus how we felt a week ago. Greg and I we both covered Cerevel and Karuna. I mean, there's a lot of reason to think that muscarinic should work in this population. The question has always been the therapeutic index, right? And like Cobenfy is a great drug in schizophrenia, but the dosing in ADP is 3 times a day. There's this food effect you have to navigate. It's a population that is more sensitive to side effects, especially with psychiatry drugs. And so that's like always been the question. But I actually thought this update that might have read bad on the surface was actually a net positive versus how everyone was feeling.
Interesting takeaway. Let's go to Praxis. Brian, you're going to give us the update on this one. Brian, you're muted.
Oh, sorry. So it's actually 2 updates, and I think it's sort of in the regulatory section of the discussion, which never seems to end on these Fridays. But the first update that they released was they had a pre-NDA meeting, and this is regarding the potential submission for approval of their drug ulixacaltamide, which had a positive phase 3 program the other month in essential tremor. Anyone who's been following the essential tremor space, there's basically nothing approved in the modern era of drug approvals for essential tremor. It's pretty much been a graveyard of failures. This phase 3 program does not have sort of a traditional history here. They were actually recommended to futility earlier this year by a data monitoring committee. They wound up not following that recommendation to stop the study. They continued it on, and when they unblinded the final full data set, on the surface, it's an overwhelmingly positive data set. They have very strong p-values on the primary endpoint across secondary endpoints. There's 2 studies within the phase 3 program, so it sort of meets the metric of having 2 separate clinical studies. It also, I think, very much reflects the data that they saw in their phase 2 study, so I think it's very, very consistent. But the pushback has really been on this idea that because of this sort of non-traditional occurrence, that the FDA may not be open to reviewing this, or through the review, at the end of the review, the data wouldn't be as positive as we see in the initial top line. So this is sort of the first step to getting there, right? And I think the worst case scenario would have been, even through a cursory review of what the data was, the FDA would say something like, well, you didn't follow a DMC recommendation, you changed the timing of the primary endpoint, or, your analysis is just totally flawed and we will, do not submit an NDA. That's not what happened. It seems, when I talked to the management last night, it seemed they had a very positive, encouraging meeting with the FDA, that there were really no major issues to talk about, and they've reiterated that they're basically going to file in the very near term timeframe, early 2026. And it doesn't seem like there's really any other additional asks to the filing. So I think it sort of meets that first hurdle, and next year it'll be certainly a hotly debated name. I think this is a company that's trading a little above $4 billion in market cap, right? I mean, the potential opportunity in ET is certainly, even at peak, could be something much more substantial than that. So I think that's sort of the debate that we're going to have next year. Like, is this going to get approval? Can you see a big move on the upside, or are they going to run into regulatory issues? The second data point that they had, I think, certainly less controversial, had some component of the stock move, but not very surprising. They had a positive readout, this time an interim readout, but due to overwhelming efficacy was stopped for one of their two epilepsy drugs. This one in two subgroups of developmental and epileptic encephalopathies. We're going to see that data tomorrow. They just announced that it hit at interim. We're going to see the data at AES tomorrow, but I think we already have an earlier cohort of this study, and mechanistically, this is a mechanism of drug that works very well for these types of seizures. So I think you're going to have two NDAs under review from Praxis next year, and that's certainly I know a lot of us here follow neuro names. It's pretty rare to have two totally different NDAs under review at the FDA for neuro indications.
Hey, Brian, there's just on double click on the whole Praxis controversy, right? I mean, there's some investors out there who are just worried that this futility to then the study overwhelmingly working thing, that there's something that doesn't pass the smell test. And then you have, I think, a really substantial imbalance in dropouts between the drug and placebo in that study. And Praxis is one of the small handful of neuro names I don't cover. Do you feel like your conversations with them and what they've disclosed publicly have satisfied you around those two issues and any regulatory risk there?
Yeah, I mean, look, I think the nature of the recommendation to stop the study and then have an overwhelming efficacy. I mean, it seems like they've sort of indicated that the point estimate at interim and at final analysis is the same. You just had greater variance. And look, I mean, they only had a little more than 40% of the patient population they ultimately enrolled at the interim analysis. So look, I mean, I think it was just massively underpowered. I don't know what the specifics were from the data monitoring committee that would see the futility threshold, but I mean, they've sort of indicated that the data itself doesn't change, just the variance, and therefore the expectation around what you would get for statistical significance had. Look, on the dropout side of things, yeah, I mean, that's a big debate. Are you looking at an 8-week endpoint and you're basically selecting for responders because your dropout rate is so high. And look, they go through a lot of analyses in terms of tipping point, in terms of using ITT with MMRM imputation and COVI imputation, looking at all the various different timeframes for the endpoint. And look, I mean, they're all sort of positive. Most of them wind up still having p-values of less than 0.05. The thing that really sells it to me is they basically had the full effect size at week 4. So before they had most of the dropouts, they were already seeing the same effect size. So I think that sort of reflects what the mechanism is. And again, when you go back and you look at the history of this drug and even this mechanism, if you actually look at Neurocrine's data, they did a very small study. They didn't move forward with it. But I think we look back on that now and you're kind of like, oh, it sort of had a very similar effect. It was just not powered to be statistically significant. And, I think it's interesting to see if Neurocrine maybe decides to try to even reboot that program.
Yeah, this has been a colorful and spicy name from the very beginning. So we'll see what comes. Probably not going to have time to get through all our other data updates. The one I do want to talk about, maybe with the remaining time, just because I think that it's a good segue to an interesting conversation. That's the Janux prostate cancer data update. Didn't go so well for the company. Stock got cut in half, trading now close to cash. This is their PSMA by CD3 mass T cell engager that looks like an active drug. In terms of the investor response to the data, probably a little mix of a little disappointment in the data relative to where the expectations might have been, but perhaps even more impactful was the kind of selective disclosure of the company and what they chose to present to the street and what they didn't present to the street. And talking to the company afterwards to better understand it, what they cited was, the very intense competitive dynamics in the field and not wanting to, having gone through the process of learning some important lessons for their own platform, and then informing competitors, and giving them that chance to catch up and draft off of the hard work that Janux has done. And that explanation's resonated with some investors. It hasn't resonated with other investors, but it is something that I'm hearing more of, especially with the rise of China innovation and the view that, whatever is done in the US will be matched or quickly even potentially bested by China-based biotech companies. And so perhaps a growing need for secrecy of data and products and constructs and even patents, et cetera. So probably not so much a discussion of the data. That would be a very lengthy discussion, but I'd love to hear everyone's thoughts about this general dynamic and whether we need to be um, prepared for more selective disclosure due to competitive dynamics and perhaps having to live with being unsatisfied with data sets, and having our curiosity, not fully addressed due to these competitive dynamics. Not sure if anyone's kind of come across this situation in a meaningful way before, but I suspect we're going to be seeing it going forward.
Yeah, maybe I'll just quickly just say, like, I do think amidst all of our discussions, whether it's with corporates or with investors, the so-called rise of China biotech has certainly been an emerging topic. I do think on some level, I've always viewed the U.S. Biotech innovation-based industry as like one of the crown jewels of our country, and so I think on some level it needs to be protected. But then again, competition is competition. So, Josh, I hear you on perhaps how some companies might be approaching disclosure of data, and I can understand the argument. I think it makes it more difficult for what we do to be able to evaluate how strong a data set is for a company and how to advise clients on to invest or not, if we're going to have more selective data disclosures that really don't give us a sense one way or the other, like how good the quality of the data are. I don't know, Brian or Paul, if you've got a view.
I mean, there's only some management teams that, have earned the right in the eyes of investors to do that. This isn't any comment on the Janux team. I don't know that team, so I don't cover that company. I'm sure they're a great team, but I think it's hard to not give people all the details when investors are keenly focused on those details to compare in competitive dynamics in a space where there's big companies involved. Um, Usually opacity is discounted as something that is negative. I think people are cynical, right? And so it's a tough situation to kind of use competitive dynamics as an excuse, right? I mean, most good spaces are competitive.
Yeah, I think I would agree with that. I think investors, I think, have a view that, like, if we're going to invest, we're investing in the management team, we're investing in the asset, the technology, the opportunity, and we kind of expect that we can trust you with our capital. And to the degree that management teams choose to be less transparent, I agree with you, Paul, that opacity is not usually well received.
Hey, Josh, you on mute?
Oh, there you go. Thank you. I was the one screwing up. I'm just going to kind of close out by flagging Otsuka's Voyxact for IgA nephropathy, priced at nearly $400,000 a year. So, kind of ultra premium pricing for these rare and even some of the not so rare diseases continues. Probably a topic that we might be safe from for the next couple of years, but I would imagine these very high launch prices are going to be front and center again at some point, and maybe that's what's going to end the rally of biotech. Hopefully not for a number of years, though. All right, any closing thoughts here? Paul, we'll start with you.
On the spot, closing thoughts. No, this was a great discussion. I love it when we have a full analyst takeover. You guys are
Likewise.
speaking my language.
Greg, how about you?
Yeah, no, I mean, I'll just briefly mention we have the ASH meeting that's coming up soon. Lots of companies with really exciting data. I just want to flag one company called Terns Pharmaceuticals, which has got really interesting data in CML. They've got a big data presentation on Monday. The stock has ripped about 250% since the abstracts were announced. And this could be potentially a best-in-class asset for CML, but obviously it'll be dependent on data. So I'll be there, Orlando. Anyone else is there, please say hi. But I'm looking forward to Praxis. Thanks for the opportunity to contribute today.
Awesome. Brian?
No, I guess I'll just say it was a great session today. Glad the four of us could be on doing this. I too love the analyst back and forth.
Yeah, a lot of fun. Thanks everyone for tuning in.